Good morning. I'm David Talbot, Managing Director and Head of Research for Red Cloud Securities. We're pleased to have Paramount Gold Nevada. It is focused on developing its Grassy Mountain Gold Silver project in Oregon and the Sleeper project in Nevada. And I'd like to welcome Rachel Goldman, CEO, to speak at our conference. Rachel, you have 15 minutes to speak, and then we'll have a 5-minute Q&A at the end of the session. Attendees, please feel free to ask questions using the Q&A link below. Please take it away, Rachel.
Thanks so much, Dave. I want to also thank you and the entire Red Cloud team for putting together this very efficient and effective conference in these COVID times. It's nice to have these platforms to have an opportunity to share our story. So who is Paramount Gold Nevada? So for a bit of history, this is actually Paramount 2.0 for all intents and purposes. The first Paramount, called Paramount Gold and Silver, was sold to Core Mining back in 2015. And at the time, Paramount Gold Nevada was spun out, aptly named because we held the Sleeper property in Nevada. Subsequently, the following year in 2016, the company acquired the Grassy Mountain project in Oregon. And since that time, Grassy Mountain has been really the primary focus for the company, advancing it through various stages of feasibility studies, culminating in a feasibility of study that we released just this past fall, which I'm going to share some details with you on, and advancing through the permitting process. So where we sit today is we're a US domiciled company, US listed, with over 4 million ounces of gold resources, all based in Oregon and Nevada. Current cash balance is about 3.5 million, and we have a strong supportive shareholder base. I will give a particular nod to Seabridge, who is well represented on our board and has been a very supportive partner for the company through this process. And I would also point out Ausenco here, who became a shareholder due to the fact that they were lead on our feasibility study and elected to take stock instead of cash to perform that work for us. So because Grassy Mountain in Oregon has been such a main focus for the company, I do want to spend a little bit of time just on where we are in Oregon. Because people are generally more familiar with the beautiful coastal west side of the state. I do like to show this image here, which is actually access road to the Grassy Mountain project, as we're located all the way on the eastern side of the state. In fact, the closest airport would be Boise. So the topography, as you can see, is actually quite similar to Idaho, quite similar to neighboring Nevada as well. An important distinction with the East versus the West is also the lack of industry and economic engines on the eastern side of the state. That's part of the reason that we've really gotten very strong support at the local county level and all the way up through the bipartisan support from the senators in the state as well. Because Grassy Mountain, when it's in construction, will generate 300 construction jobs and then 100 full-time jobs when in production. And this is in an area of the state where it's had really record high unemployment and poverty as compared to the mean average in the state overall. So the feasibility study that we released just this last September, I won't spend too much time on it because this, it is relatively older news, but it did show some material increases from the PFS. So an uptick to 390,000 ounces of gold that we're going to be mining there at 6.5 grams per ton. This is a very small underground operation, small footprint, but really right-sized for a company the size of Paramount. So we have a simple CIL recovery process. We'll be producing about, call it 47 to 50,000 ounces of gold and silver annually, sub $100 million CapEx for an initial mine life of 8 years. And what's particularly exciting to us is that we'll be generating annually free cash flow on a post-tax basis that's pretty close to our current market cap. So last I checked, we're about 37 million market cap as of yesterday. So the study that we completed in September was run at a base case 1470 gold price. We were particularly excited about all-in sustaining costs sub 700 for an IRR of 26% and an NPV of 105 million and a quick 3-year payback. Certainly there's a lot of upside to this project with higher gold prices. And you can see at a $1,900 gold price, which wasn't far when we originally released this study, that NPV grows to about 200 million for a 2-year payback. And in particular, I find that there's great downside protection with a break-even gold price of about $1,000. So no matter what happens between now and when we make a construction decision on this project, we think we're going to be in pretty good shape. So this here in the red circle is the actual mine that we'll be building, that 390,000 ounces at just under 6.5 grams a ton. But this reserve and resource page starts to highlight why previous owners of this project envisioned it as an open pit, as you can see, with well over 1 million ounces at over a gram per ton. However, this current Paramount management team was the first owner of the project that I think correctly understood the social and political environment of permitting the first ever mine in the state of Oregon, that the likelihood of an open pit was probably far less to be permitted than a smaller footprint underground mine. And in this cross section here of the deposit, you can see that further illustrates that exact point. The mineralization of the lower grade occurs very close to surface, about 50 meters in the blue here. But the mine we'll be building will be targeting this higher grade material in the reds and pinks, and that's about 100, starts at about 150 meters from surface. But again, showing where this could be really, if the situation permits, an optimal open pit scenario. And so what we've permitted is the underground mine, but our hope is that as the mine gets into production, proves to be successful for all counterparties and stakeholders, community and otherwise, that they'll be more receptive to the concept of expanding into an open pit down the road. But that's not something that's in our current numbers at this juncture. So this shows the nice mine plan on a year-by-year basis through the 8 years of its life. As I mentioned, we have a very simple flow sheet here in terms of our processing. We will be producing doré on site through the CIL recovery process. We had initially in the PFS included a gravity circuit, which we were able to subsequently drop for the feasibility study without really sacrificing anything on the recoveries, as we saw on the first slide. They're about 93% for gold, but it did save us about $2.5 to $3 million. So as I mentioned, we are going to be building Oregon's first ever gold mine. And, you know, when you're the first to do anything in any geography, it always means that it could take a little longer and cost a little more. But I'd say that the experience the company has had thus far in terms of dealing with the regulators has been largely positive one. And we do see it as an opportunity to ingratiate ourselves in the state and really help up the learning curve for all parties involved. So where we are thus far is we have received our conditional use permit from the county, and we're in ongoing permitting discussions with the state and the Bureau of Land Management at the federal level for the plan of operations. This is a great aerial shot because it does underscore too that where our project is located, there's really nothing of consequence around us. There are no farms or ranches, bodies of water, or anything that will be problematic in terms of building a mine. So the permitting process in Oregon, while permitting isn't the most exciting thing for investors to have exposure to, it is important just to understand a couple of Oregon specific aspects to this. So while these rules have been in place since the early 90s, they've never permitted a mine before. It's not because they've ever rejected a mine, it's simply because there hasn't been the right combination of the right asset and the right company with the right vision to take it forward. The other thing that's important to note here is this is a time-based process where the agencies have specific periods of time allocated to them to assess our applications at various stages. And the other important point to note here is this is a pay-to-play state. So Paramount is always very focused on making sure that we have sufficient cash balance to be able to advance our permitting efforts. So where we are in this right now is we've already made one initial CPA, Consolidated Permit Application submission. That was in November of 2019. The state agencies responded in their prescribed period of time, the 90 days. That brought us to February of last year. And so since that point, we've been aggregating and triaging the feedback that we got so that we can work further with our consultants for our next submission, which should be in June of this year. Our expectation at that point is that the application will be deemed complete, and then that'll start the clock ticking for 225 calendar days until we receive draft permits. So based on that timing, what I put here in terms of expected receipt of draft permits in 2022, that would allow us then to look at construction financing prior to construction, and production could be by 2023, call it fourth quarter. But, you know, this is not to say that we haven't already achieved a number of significant milestones in this permitting process, even though it's not well recognized by the street that Oregon is going to be open for business for mining. We've received a number of positive milestones since we've undertaken this process. So I do want to skip now to what exploration potential looks like for us in Oregon. While we do have some near mine exploration targets, the one that we're actually the most excited about and is our priority right now is called the Frost Project. And this is located 12 miles from Grassy, so it's within trucking distance. The reason we're excited to attack this one first is that this was drilled back in the 80s by Western Mining. And at the time, they had hits of up to 20 grams per ton gold. So while Grassy is already high grade at 6.5 grams, if we're in a position where we can truck material, you know, 10, 15, 20 grams per ton, it'll certainly do wonders for extending the mine life and for the impact on the payback as well. So right now we've applied for and received virtually all the permits required to be able to drill Frost. We do have a rig lined up, and as soon as we're in a position to be able to say all our ducks in a row, we will put out a release to that extent. And what we'll be doing essentially is a couple of things, because there are a lot of similar geological signatures here as we see at Grassy. We will be testing some of these alterations and structures that we already see, but we will also be sticking in some holes to try and confirm those historic intercepts that were drilled all those decades ago. So shifting now to Nevada, which again was the genesis of this company. The Sleeper Gold property has quite a history behind it, produced, you know, close to 2 million ounces at 7 grams per ton from one very high grade Sleeper vein. And obviously was very, very profitable even in a low gold price environment in the mid 80s to mid 90s. So what we have right now is a lot of ounces, in excess of 3 million ounces M&I, but at materially lower grade. That being said, we think this is a phenomenal starting point for an asset in what has been reaffirmed as the best mining jurisdiction in the world, in Nevada. So this will now be a more prominent focus for the company through the rest of this year and the foreseeable future. So in 2015, there was actually a PEA that was done on that existing resource at Sleeper, that lower grade but big resource. And what it outlined at the time was a heap leach operation, 30,000 tons per day, producing annually about 100,000 ounces of gold, and you know, a 9-year mine life for initial capex of 175 million. So clearly this is a dated study, both with the commodity price inputs at the time, but there are a number of other avenues that we have open to us to also refine and optimize what Sleeper could look like on a go-forward basis. So in December of this past year, we did announce that we are initiating a work program that will have a multi-prong sort of approach to trying to define what Sleeper should and could be in a new mining scenario. But just using these post-tax numbers from the original PEA, we can see that there's significant opportunity here to generate strong returns from Sleeper. So you'll see us in the next coming months announce some drilling results as we are able to start drilling there. We're expecting to do that in June of this year. The initial resource that I identified is just in this little circle at the top here where the red stars are, but we have 38,000 acres here that have been virtually unexplored. There's a lot of opportunities for us to test metallurgical results from BioOx options for treating the sulfides, which were currently excluded from the existing resource and that PEA, and show some initial very strong results here. And of course, there's a lot of higher grade material too that we'll be looking to confirm to add to our current resource base. So the team that I would just point out here, the entire management team has been together for about 10 years through Paramount 1 and 2. I'm the only new player here. And we have on the board, as I mentioned, strong support from the Seabridge team. So we think the stock is very inexpensive at this juncture. We've been very mindful of keeping the share count low. So we only have about 43 million shares out on a fully diluted basis. Our average daily trading volume has ticked up nicely, about tenfold over the last year. But we think the stock is very cheap and has a lot of opportunity here, no matter what happens with the gold price, to see us continue to de-risk and advance our ounces and get more than $10 per ounce credit for them. So these will be the next catalysts that you should see from us over the coming 6 months. And then from there, we will build on what our program will be for the following year going forward. And with that, I will take any questions you have, Dave.
Okay, thank you very much, Rachel. Good presentation. So first question here, do you expect the state of Oregon to live up to its permitting responsibilities, and particularly with respect to timing, and have they been fairly easy to work with?
So I would say yes, because the submission that we made in November 2019 was partially done to test whether they would respect their 90-day max period. Now, this is a coordination between, call it 6 or 7 regulatory bodies in Oregon, all working together to go through our 10,000-page document that we submitted, and they respected that time frame. They've been quite solicitous and accommodating, and the discussions that are going on now, I'd say, are even addressing some of the items more from a acceptance lens than necessarily a completeness lens. So that's why our hope is that when we make our next submission, after the required 90-day review period, they'll come back and say, okay, we have everything we need here to make an informed decision over the next 225 days. So thus far, our experience has been positive on that front.
Okay, thank you very much. And still at Grassy here, how advanced are those regional targets? Is there a lot of upside potential at the project?
Well, Frost is the one that we're most excited about, simply because of the grades that were hit there historically. It was never mined, and like I said, we unfortunately don't have actual assays or core. We have summary reports that we're working with, but as you can see, we have shot some air mag over Frost, and this is where we're seeing these similar kind of magnetic lows signatures that we see at Grassy. So this will be our first opportunity to be drilling in there, which should start as soon as April. So we're really quite excited because nobody has drilled here since the 80s, since those intercepts were hit.
Okay. And still at Grassy, you've got a 1 million ounce resource there, but you're planning on targeting, I think it's 300,000 or 400,000 ounces from underground of higher grade. There's some lower grade material that you can actually upgrade into reserves that actually make sense for this for an underground deposit. Is there some expansion in reserves possible here?
Yeah, what we think what we have right now, what we've underlined in terms of the feasibility study for this smaller underground mine was done really because, if you're going underground, obviously the higher grade material is more economic. But at the same time, in order to get down there, we will be passing through lower grade material. I do think that there's going to be opportunities both for lower grade material to work its way into the mine plan, but also we haven't really completely exhausted the opportunity drilling at depth to see if there's more higher grade to be found. That'll also be more economic to do once we're already down there. So I think there's a number of avenues where Grassy can end up being certainly longer than 8-year mine life, and for production once it starts to be higher than what we've outlined in the feasibility study.
Okay, and then last question here on the Sleeper Gold project. How quickly do you think you could get that into production? Do you need to update the PEA first? And what's that going to look like? Is it going to be a PFS? Is it going to be PEA update first? So how are you going to tackle
I
that?
think what's most likely to happen, simply because we've really just scratched the surface here of what we have at Sleeper, both from an acreage standpoint, from an optimization standpoint in terms of processing alternatives. You know, if we were to start today to try and move it into production based on what we know today, it could take about 3 years in total. But I think it would be in the best interest of our shareholders who've been sort of warehousing, if you will, this project for the past number of years, for us to define better what it actually is and what the upside ultimately could be, what the best way to go about it is. So if it takes us a bit more, if it takes us a couple of years of studies in different forms, there'll be a number of different data points that come up, whether it's metallurgical results, drilling results, or otherwise, that will paint a much more, I think, effective picture of what a production scenario should look like.
Perfect. Okay, there you have it, straight from Rachel Goldman, and thank you, Paramount Gold Nevada. Up next, we have Sterling Metals. Thank you.
Thanks, Dave.